Well, I think getting to herd immunity is really what the equity markets want and the bond markets want. But longer term, I think the biggest risk for financial markets is what happened post the recovery from the global financial crisis in 2008, 2009, which is that there's a sovereign balance sheet concerns. And if you do remember, in 2011, we had a European sovereign crisis in which countries found it very difficult to roll over their debts. And of course, even in the United States, there was enormous pressure on President Obama to actually also restore the fiscal conditions of the US. There was the Tea Party, Republican Tea Party, that was pressuring the president. So at some point, the markets may flip and start to worry again about just how far the debt to GDP ratios can expand. And as I said, I think it's possible that that's more of a risk for 2022 rather than 2021. The markets at the moment are very forgiving of any negative news and are willing to buy into the hope of a much quicker vaccine rollout and a recovery in the services sector.
So, second, more led by recovery in Asia. Good morning, Shantanu. Joining in this conversation. That rotation from out of U.S. assets to international equities, international assets, Asia assets, do you think that would become a consensus call almost for 2021?
It's kind of a consensus call, but it's actually not necessarily being followed through in terms of fund flows. So consensus calls are, switch from growth to value, switch out of bonds to equities, switch out of the US into international equities. But really, only in the last 3 or 4 weeks have we actually seen any visible flows into the value sectors. And really, there's not been any massive shift out of fixed income into equities, nor out of the United States into international equities. So I think there's an awful lot of talk, but really very, very little follow through by investors. So very early days in terms of that trade being actually deployed by investors.